Welcome to Master Your Finances.
Diving into the dynamic world of venture capital at a young age, meet Alexander Advani and Ayush Dave, two rising stars navigating the complexities of investment in groundbreaking tech and FinTech startups. Alex, a sophomore at Northeastern University, balances his studies in business administration and architecture with his role as an associate in the Homeroom Fund, a student-led venture that invests in innovative early-stage companies. Meanwhile, Ayush, a junior at New Canaan High School, brings his passion for philanthropy and photography to his role as a venture analyst at 1435 Capital Management. Join us as we explore their experiences at these cutting-edge funds, the insights they've gained, and the impact of their work on the venture landscape. Tune in to hear about Alex's unique journey with the Homeroom Fund and the valuable lessons both young professionals have learned in the fast-paced world of venture capital. So I think this is really cool. You guys are younger than I am, let's just say, by at least a couple of years, right? So this is great. You're already involved in venture capital. So when I was your age, I'm not even sure if I knew technically what that was. I probably knew the concept, but I didn't know there was such a thing. Yeah. I knew you go out and try to find money. That's all I knew. I didn't know there was a system out there to go that people actually want to give you money, which I thought was kind of interesting. So what was your first exposure to this whole concept that there was such a thing?
So venture capital specifically, or
yeah. So what? Most people's like, I want to be a fireman, a policeman, a doctor, a lawyer. There's these categories, but venture capitalist. I'm pretty sure that wasn't on my list in high school, just personally.
Yeah. Okay, so during COVID, that's kind of when I first became exposed to finance as a whole. I made a pitch deck that I presented to my parents to get them to convince them to let me invest my own money. But that was mostly with public markets. So it's not really venture capital because that's private.
So for these lay people out there, what is a pitch deck?
Oh, like a presentation, basically.
Yeah, like a PowerPoint.
Basically.
Well, I like to clarify that because I know what it is, but a lot of people are like, pitch deck? What, are you going to throw basemballs at somebody or something? I don't know. Anyway, I just want to make sure people knew what that meant. But go ahead.
Yeah, so I just tried to convince them to let me use some of my own money and invest it. And so they did let me, and I invested in public markets, so stocks and things like that. And over time, I started to see advertisements and stuff to invest in private companies. So I started to do a little research on that. And then I realized I couldn't do that. You need to be right.
I was going to say your age. That's awesome, man.
Yeah. You need to be an accredited investor.
Correct.
To invest in private companies.
Mm-hmm.
So that's how I kind of became interested in the VC world, which I guess brought me to 1435.
Okay, that was a lot of steps you left out in the middle there, I'm sure. We'll get back to them. And then I just called up Ben and said, I'm going to come join your guys.
I obviously I applied and stuff. But
we'll definitely get into that.
Yeah,
so
definitely.
What about you, Alex? So how'd you get exposed to all this fun stuff?
So for me, it started out with more entrepreneurial endeavors. So my dad is a pretty entrepreneurial guy. And kind of from a young age, I have a twin brother, so me and my twin brother would often start different small ventures, as you do when you're a kid, kind of like the lemonade stand stuff that you start out with. And, it grew over time. Like Ayush, I also did some investing of my own as I got older, but nothing too crazy. And it's been super interesting to get into the world of venture capital. I always thought of it as something super complicated that I never really understood. But since being exposed to the Homeroom Fund and 1435, you realize that it's just kind of the opposite side of the startup world. You are investing in the startups rather than creating the startups yourself.
Right.
And it's cool to get to have experience on both sides.
Yeah, that's absolutely awesome. Yeah. So you talked about. We'll talk about this a little bit. So I think first, you were interested in it, right? So you started looking out for ways to expand your knowledge about VC. It sounds like both of you were kind of had the radar. How do I get involved in private companies?
Yeah.
How do I get more information? Education, literally, right?
Yeah.
So how did you go from that to actually somehow connecting with 1435 and saying, well, this is a place that's going to teach me a lot? Because obviously Ben's an expert. He's been doing this a while, and he knows what he's doing. He's really good at it. So How did you make that connection to him and
Yeah.
his organization?
I'll let Ayush talk about that right now because I know that you went through like the traditional steps of kind of applying to the program.
Yeah. So one thing that definitely really helped me was, I also did like something in like upstate Connecticut where I presented like a business pitch to investors. So that was my first experience in the private market. It was just, we had to create a business pitch and present it to investors, kind of come up with a business model. And that was kind of my first experience in this market. And then obviously I saw the 1435 internship position on Indeed, actually.
Oh, okay. Indeed.
Yeah.
Okay.
Yeah. And I
It's like applying for a job, right?
yeah,
Basically.
yeah, I did apply. And obviously you start by just answering some questions that they had along with your resume. But, one of the parts of the application that I thought I really enjoyed was the research report, where they give you a company and you do some research on it, research on their financials, market analysis, maybe a recommendation, things like that. So that was kind of my path into the application process.
Okay.
And I think one of the things that really helped me with that was my exposure to the other side of it, right? Not necessarily as an investor, but also as someone who has pitched to investors.
Right.
I thought that was really something that I was able to, bring into my report, which was nice.
It's good when you see both sides of an equation because what I've noticed in business is if you ultimately end up with win-win situations, then things tend to work out better.
Yeah,
if you understand the position that the entrepreneur has, you understand the position the investor has, then you can work out something that usually works best for everybody.
Yeah,
which is nice. Obviously, you want everybody to win. Otherwise, it's not fun.
Yeah.
Exactly.
So how did you did not go traditional then? How did you?
So I found the Homeroom Fund before I found 1435.
Interesting, because it hasn't been around that long.
Yeah, so this is with the group that started last summer.
Right.
So I actually was a part of reviewing applications this year. So I saw the 3 applicants that are here today throughout the application process. But originally, the Homeroom Fund that started off of last year's internship, they were looking for LPs, and my dad works in the nonprofit sector with a lot of kids, especially in like different fields of business, mostly entrepreneurial stuff. So they reached out to him as a prospective investor. He saw the opportunity, knew that I was into VC at the time, and he told me that I should reach out to them. So I ended up just calling up Ben, and then I talked to the team for a week or two and kind of got initiated with what they were doing. And yeah, it was just a good fit. I ended up joining the team that year, and then now I'm doing the internship afterward. As a way to get more experience.
Just doing it in the reverse order kind of thing.
Yeah, essentially.
That's kind of cool.
Yeah, I joined pretty much right when I started my first year of college. So I was pretty busy that first semester, just kind of getting on as many possible calls as I could with Ben and the team, and just trying to see as much of the VC world as I could to learn through doing instead of in the classroom.
There's no better way to learn than through actually doing stuff.
Yeah, at first I was like, what am I doing? I didn't understand anything that was going on, and then over time, I got acquainted with the terms, the vocab, kind of the lingo that people use in the VC world, and now it feels like secondhand.
Yeah, I think it's cool that when Ben first told me about the Homeroom Fund last year, I thought that was awesome that he was using younger people, because you guys see things that Ben's not that old, but older people that don't necessarily see, because you're in a different generation. Right, yeah. So you have a different perspective, which each generation has their own perspective, which I think adds value. So the more layers that you have in perspectives, I think the better as far as any potential investment, right? Because you're going to see it from where your generation sees it from a little bit differently.
Yeah. That's why it's so perfect. We're all still pretty young, we're learning about it, and then we also have the backing of 1435 Capital with all that experience behind us to kind of nudge us in the right direction.
Yeah, Ben will be like, no, or okay. You'll see things right away that you're like, he's like, that's not going to work. Or it's like,
sure.
That might work.
Very straightforward guy. We appreciate it.
Yeah, he tends to cut through stuff, which is important. And what I've noticed about a lot of people that are similar is that they tend to see things very quickly and can go right down to the root of things that are going on. Yeah. And that way you can move on to the next one, because as you guys are well aware, you guys see lots and lots and lots of stuff, right? And every once in a while you pull one out that's really makes sense.
Yeah.
And it's got to be lots of different parameters. So So I guess Alexander, how did you? I guess you have a business administration, right, and architecture.
Yeah.
And how did that connect in with the whole venture capital thing? Architecture is a little different.
The architecture was added quite recently. I only did one class, and that was technically college, but before I really started with the school. So it's mostly been business focused up until now. I just added architecture for some more creativity, and I've always been interested in it, so I added onto my workload. But yeah, I mean, I think I chose business admin because of all of that entrepreneurship that I've been exposed to for so long. You know, I've been doing like competitions, doing similar like pitching kind of stuff, so it just felt natural. And I mean, I'm really enjoying it so far. There's so much you can do with a business admin as your major.
Oh yeah, absolutely. And you know, we have about half a minute here. So you were interested in philanthropy and photography, right?
Yeah.
So that's kind of cool. Well, his dad was your dad's a nonprofit, right? So how'd you end up being the philanthropist over here already? You're young to be a philanthropist. Usually it happens a little later. Yeah. That's awesome though.
Yeah, so I sit on the board of like a local organization in my town where we basically work with like about 50 or so nonprofits, and we collect like obviously the volunteers in our school, and we give them hours, and we set up events with these nonprofits for these volunteers to attend. Okay. So that's kind of where my involvement is. But yeah.
Awesome. Okay. Well, you're listening to Master Your Finances. We're going to take a quick break. We'll be right back. So Alexander, can you share with us a little bit about what it looks like as a Homeroom Fund associate and getting that started and actually working on the fund itself? So what's that like?
Yeah, so I mean, it's pretty much split between two things, kind of raising money for the fund and then deploying capital.
Right.
In terms of deploying, you're really just trying to get as much deal flow as you can, or at least as much quality deal flow as you can. So that's seeing as many pitches as you can, going to as many events as you can, networking as much as you can. So since I've been in New Jersey for the summer, remember I started with the Homeroom Fund when I was in college. So I was in California and then London. So
I didn't know that.
I actually haven't met two of the members of the team. I'm meeting them like next week when we do a Homeroom Fund event on August 8th. But yeah, I mean, it's just getting on a lot of calls, kind of seeing a lot of pitch competitions. They have a lot online. So you kind of go through maybe 50 different startups per week, or at least that's kind of the numbers that I was running when I was in college. And through that, you kind of email those you're interested in hearing more. You get a pitch deck from them, you have them send it to your email. You look through that with the team, you get on a call with the team, and you know, it kind of just progresses. If you stay interested in the company, more and more steps appear, kind of doing that due diligence that's necessary to analyze whether or not it's a good fit for your investment.
So of all, like generally, if you see 50 companies or 100 companies, or how many does it take before you typically find one, or does it vary over time?
It completely varies. I mean, there's no real set number, but you have to be
willing. I didn't think it was a set number, but
you have to be willing to be patient because you're going to see so much, and it might be a great company, but that doesn't always mean it's going to be a great fit for your investment.
Right.
It depends on what stage the company's in, you know, what their goals are, their ultimate motivations in the end. And then you always have to meet with the team if you're really interested. So also seeing like the founders, what their goals and ambitions are, how they run their company, how they plan to run their company. Maybe if they're going to add more team members, you want to analyze that too.
Right.
So, you know, the steps just keep appearing.
Okay.
Yeah.
Awesome. So Ayush, so what's been the most significant learning experience you've had so far working at 1435 Capital?
So I think the most significant is probably learning about the due diligence process that venture capital or equity firms go through before making an investment, obviously. Because, you know, like Alex was saying, out of, let's say you have 50 elevator pitches that you hear, you know, you only choose to follow up with one, but even after just following up, there's a lot of steps before you follow up and then after.
So what are some typical things you might find during due diligence that people may not necessarily expect? Like I'm running a company and I'm like, oh yeah, come in and like do your due diligence. So we're good to go. And then you're like,
no,
Well, I mean, things come up. I'm just curious, like what kinds of things do you see when an owner might say everything's good, but you're like, questions that come up for you. What do you typically see come up?
That's very true. Especially, so one of the most important things that we look for is the team. You know, are they willing to take feedback? Are they willing to pivot in certain situations? Do we think that they have the experience to do what they're marketing? And that's not something that's always really evident in the sales pitch that they're giving, right? So our first step of due diligence is typically like following up with the company one-on-one.
Right.
And that kind of gives us an idea of like, who the leadership is, what values they have, what experience they have. And there's also a lot of other things that you see, especially through our research reports, which are another process of due diligence. You start to get a better idea of the company's financials. How much cash they're sitting on, what their burn rate is, and burn rate is basically how much the company is spending, typically on like a month.
That's not the campfire in the back.
Yeah.
Okay.
It's
Just
typically on like a monthly basis.
Could you explain that?
Yeah, because you want a lean company, right? You don't want a company that's overly spending.
Yeah, they talk about I think Tesla was one they talked about their burn rate a lot because they were burning a lot of money up front. So
yeah.
So it can be dangerous. I think Amazon had the same issue for a long time. Mm-hmm. They said if you don't expect to lose money for the foreseeable future, do not invest in us. That's literally Bezos told them in so many words.
Yeah,
he's like, don't even bother. But so you have to look at all these different pieces, right? Mm-hmm. And so that's important. So what are some of the challenges you guys have faced working in venture capital, being younger than the average person in venture capital, I'm assuming?
Yeah.
You're probably below that number. So what are some challenges you've seen based on your age?
I mean, people don't always kind of think of you as the traditional venture capitalist in their mind. You're less experienced, which you are, but I mean, We're all learning. It would be the same as if another young adult was just starting to learn venture capital. And now that we've all had this experience, we feel like we should be taken seriously, but people don't always see that.
Right.
So I think that the best thing for us has been getting to go out to a lot of networking events and really talk about what we've been doing with people who might work in different spaces or also have some VC experience, and just getting to share that knowledge and develop one-on-one relationships where they'll realize, this is someone that I can take seriously.
Right.
They actually know what they're talking about. That's big.
Right. Yeah, I think that's with any profession. You have to
you put yourself out there. Yeah, definitely.
Yeah. If people don't know who you are, there's no way they're going to trust you.
Yeah.
Because that's interesting, because as a business owner, maybe you can speak this a little bit, because you're like, well, I mean, they're giving me money, so why do I care?
Mm-hmm. Yeah.
And tell us why. I know why, but you tell people, why should they care who's actually giving them the money, right? If I'm the business owner, why do I care who the VC people are? Because there's more to it than that, right?
Yeah.
Go ahead, tell me, what other intrinsic benefits do they get other than just being handed a check? And sometimes business owners don't really quite understand that not every VC entity really is a match for your company. Just like you guys are looking the other way, they should be looking that way too, at who would be a good match for me based on what I'm trying to do.
I mean, it totally depends on the VC. Some VCs like to get very involved. Some have huge portfolios. Some have small portfolios. It totally depends. We've been asked a lot of times by companies that were kind of past the original due diligence stage about to tell us more about what we are like as a VC, because they do care who they're taking money from.
Right.
And ultimately, we'll give them more attention. I mean, we're doing this during the summer. We want to learn. We want to get better. And we want to really get to know the founders and really understand what they're doing and why they care about it. You're not always going to get that from a VC. Oftentimes, it'll just be you get a check and that's it. But I feel like nowadays, these early startups, they want advice. They want someone to listen and really help them, instead of just give them a check and expect them to do great things with it.
Mm-hmm. Yeah, and that's definitely one of the things that, again, we look for in a team, right? Are they willing to take critical feedback and constructive feedback? Especially, as Alex was saying, with 1435, it's not just a check. The venture fund, they're very involved with the company. They do go out of their way to give advice with regards to product or pivoting into certain markets. Even with hiring people, venture funds are typically involved.
And we really want a team that actually wants to spend time talking to us rather than just kind of go on their own and then give us occasional updates. We want to be very involved in the process.
Mm-hmm. Right, and I think that's important for people to understand, is that they're not just being handed the money, they're being handed with expertise, and that's why every venture capital fund typically focuses on certain areas, because that's the expertise they tend to bring. And I know Ben has certain expertise that you guys, I'm sure, are learning a lot from him.
Oh, yeah.
So you really got kind of two layers. You got the younger layer that can see what's going on right now, and you've got the expertise of somebody who's been around for a while and has been successful at doing this. Because you guys want to be in, you want to talk about that just for a minute. I mean, when you go to invest, what's your typical timeline for your exit, right? So because there's typically timelines that everybody has. So what is your typical timeline for companies? What is the range?
Yeah, I mean, it's hard to say a range because every company has different plans. You know,
Right.
there's different exit strategies. But we do definitely take that into account whenever we have a call with a company and we're actually interested in investing. We really want to know if their plan is for maybe a potential IPO far in the future, or if they just want to get bought out by a larger company.
Right.
But I mean, yeah, there's no real way to say. It's not like we specifically invest in one type of company that does one type of exit.
Right.
We're agnostic, but
Okay.
it's definitely something we care about, especially like based on what kind of company it is.
Yeah, definitely. And the company does consider that into like what stage of the company they're investing in
Right.
as well, right? Obviously, earlier stage companies have a longer way to go,
Yeah.
likely before they're before they IPO or before they're likely bought out. And 1435 typically focuses on Series A and beyond. A lot of it is growth stage, in fact.
Right.
It's like Series C, Series D, and those are typically closer to going public.
Okay.
Than your typical pre-seed investment, which is like very early stages of a
Yeah.
company.
Right.
And Homeroom Fund starts a bit earlier stage. We go up to Series A. So we're often the companies that we work with are less sure what their
Right.
exit strategy might be. So it's a little bit harder to kind of ascertain what their goals are in that sense. But it definitely helps to like have a conversation with them and kind of analyze every aspect of the business and see what we think it'll look like for them in the future and how that will affect our investment.
Right, because that affects your strategy for growth, right?
Exactly.
If you want if you want a specific buyout, like a strategic partner to buy them out,
Yeah.
that's going to be a very different strategy than
Yeah, 100%.
if somebody just general IPO or whatever, right?
Yeah.
So you're going to have to really focus on who you're going to go after and things like that. So can you tell me about any stories that you've had about any successes so far in some of the investments you've been involved in?
We can't name specific investments,
Right.
but we've definitely had a lot of fun this year. I mean, it's not like we're investing in a new company every week. So it's definitely, we spend a lot more time doing the actual due diligence than writing investment documents and stuff like that. But yeah, we can't give any specific names, unfortunately.
Okay. Can you give scenarios or just no? Nothing? Okay.
Maybe I can give you like an overview, especially of like how we source these.
Just
definitely.
in a generic standpoint, put it in a textbook kind of thing, not the SEC kind of stuff. We don't want to. We're not filing anything here.
Definitely, yeah. So in terms of like sourcing these investments, I think it's a two-way street between the VC and the startups. Like
Right.
we attend these pitch events where there's like 50 to even 100. Sometimes they're in person, like at Venture
Right.
Summits, and sometimes they're online events. And you basically just hear 2 or 3 minute elevator pitches. And I think one thing that we've all learned is that you need to be able to decide on the spot:
Right.
is this the vision that we align with? Is this idea something that we think will succeed in the current market?
Okay.
And most of them aren't. Like
Right.
the fact is, out of 100, you might find 2 that you're even interested in following up with, and in those 2, you'll be lucky if there's one that you want to go full speed ahead on. But yeah.
That's awesome. We're going to take another quick break. You're listening to Master Your Finances. All right, welcome back. So, how do you guys generally measure success in your specific roles? Like, you're doing all this due diligence. So, what's your measure of success when you're doing your work on a day-to-day basis?
I think that I would measure my success based on the work that I'm doing and the quality of that work. So, I mean, I'm writing a lot of reports, both reports on a company that we might be interested in following up on, a quarterly report for our LPs, stuff like that. I try to be intentional with my work, make sure that I'm not wasting any time, given that it's a lot of writing, a lot of reaching out to various people. So I think that I measure my success with the quality of the work that I'm producing and not necessarily the quantity of people that I'm reaching out to, but maybe how many like responses I'm getting, the feedback that I'm getting from those people, and like meaningful connections that I'm actually making over time.
That's awesome. How about you?
Yeah, definitely. It's definitely less about how many deals you're sourcing, more
Right.
about how you're improving and how you're contributing, not just like to like the company's efficiency, but also to your peers and to your team. A lot of what we do isn't independent. In fact, typically we divide up tasks, or we'll actually all do the same thing so as to get different perspectives. I mean, just the other day, as a team, we were each reviewing the same companies and then giving our own opinions on them, not talking to each other about
Right.
it, just doing it separately, and then comparing at the end. And I think that's
So, how much do the opinions vary between?
Everyone has their kind of different perspectives,
Wow, that must be an interesting conversation.
It really is
Yeah.
because certain people like certain types of tech, different types of companies, So I think that there might be the perception that VCs kind of work more solo. For us, it's definitely been the opposite experience. I mean, both at 1435 and on the Homeroom Fund team, they're both in a team environment. I mean, I'm working with other kids all the time. So
you work almost like a mastermind where you're each taking your own perspectives, and
yeah.
if you do it correctly, you end up with a better result, right?
Yeah.
That's the theory.
We've been able to improve our efficiency over time. You know, when we started the internship, we all didn't really know each other, and now it moves very fast. We're all able to kind of feed off of each other, and just like the flow of work feels great when we're all doing stuff together.
Yeah, definitely communication-wise, it's
100%.
it's great. Seamless. Yeah.
So do you ever have like startups come to you and say, "Well, I can't tell you that because I have like the secret sauce that solves the world's problems, and if I share it with you, somebody's going to steal it and take my whole business away." Do you want to address that? Because I know this comes up a lot, and I want you guys to kind of explain how they really should be thinking. How's that?
I mean, in my opinion, that's the great thing about being a VC is that you sign a few documents and you get the information. You get to look at it because you're not going to invest in a company if you don't have all the information. No one's ever going to invest in a company that says, I have something great, but I'm not going to show it to you.
Right.
So, I mean, for us, it's been awesome. We get access to the data rooms of companies. And of course, we sign an NDA, so we can't talk about that specific details. And they're not worried about that because on the legal side of things, we're not allowed to talk about it.
Right.
So, yeah, I mean, we get to see the cutting edge of a lot of different fields and technologies. And it's kind of awesome to see that, especially through various pitch decks. And then when you actually get to talk to the founders, very smart people who really love what they're doing.
Yeah.
And you make a good point. Like no VC will, make an investment into the company without having all the information, right? If there's a company that's not willing to share their technology or not willing, to go in depth towards the investors, it's just a no-brainer.
Right.
Because you can't make an investment without all the information. So
yeah. And what I like to tell, I mean, because people that I talk to, it's like, everybody, you can have a great idea, but it's all about the execution. Yeah. Because everybody's thought of, how many times has somebody seen a commercial on TV and like, I thought of that 10 years ago, but did you do anything about it?
Exactly.
No. Right. So, and I like to point that out because ideas are all over the place until you actually put together an execution strategy. It really doesn't amount to a whole lot, until you start actually putting it into action, right?
Yeah, I mean, we see so many startups. It's not crazy to see two startups kind of doing a similar or even the same thing, but in the end, it just comes down to execution. If you can operate with a better burn rate than another startup doing a similar thing, you're gonna do better in the long run.
How many search engines have we seen? Many of which we don't even know about anymore, right?
Good amount.
So they're all pretty much doing the same thing, right? You type it in a little bar.
Yeah.
So what trends do you guys see in FinTech now that you're most excited about, and why is that?
I think there's definitely a lot of AI these days. In FinTech specifically, you were asking?
Yep.
Yeah, so there's definitely a lot of AI incorporation and also that transition towards crypto.
Okay. Are you a real person sitting in front of me right now? Or are you like a hologram? Just double checking.
Yeah, the listeners won't know.
I think the AI side of it is really interesting because a lot of companies these days are just incorporating AI as a buzzword in their pitch. And they're like, oh, we integrate AI in X so-and-so way. And 80% of the time.
That was like when blockchain. Everybody became a blockchain company. I remember that.
Yeah, 80% of the time, the AI is not vital to their business model, or it doesn't have much to do with their value proposition. So, I think that's a really interesting thing, being able to identify where AI is being efficiently used to, meet the needs of the customer or, really contribute towards their technology.
Okay.
Yeah.
So what do you see the role of venture capital being as technology advances further? How do you think it's going to help to accelerate this process?
Yeah, so a lot of the technology that's like very innovative we see in early stage companies, right? And venture capital, I think, I think it's overlooked in the sense that it's what drives companies to become big, right? These days people think of like Amazon, Nvidia, Apple as like the big innovators, and don't get me wrong, they are. But at the same time, they were once very small companies operating out of like a garage or something.
Right.
And to get public, to get to that stage, it took a lot of venture capital investing, whether it's through family and friends investing or even angel investors, things like that. Venture capital is what gave them the capital and the money to, scale their operations and get to where they are today. So it's important. And I think one thing people sometimes miss, the smaller business owners, they don't realize that as you grow, certain costs actually come down. Like your cost of capital drops, your cost of like acquisition, like hiring people. A lot of your intrinsic costs that you have in a business, as a smaller business owner,
as a percentage of your revenue and your value is a much higher number. But as you grow, that's why you start to see these really, really big companies that you feel like, how do they have all these people like do nothing, right? Yeah. Well, because they have this efficiency of scale and they can actually handle it better than like a small company can. I remember when the regs came out for the banks, the big banks are like, yay, because we can handle that cost. Yeah. Little banks are like, you're going to crush us. We can't afford this, right? Because there is an efficiency to scale, which I think is one of the things that venture capital kind of helps with, right? You guys get that growth thing going. And lower other costs on the business side of it, which sometimes people forget about that piece of it.
Yeah.
So what advice would you give to other young people who are interested in entering the venture capital field?
Yeah, so I mean, it can definitely seem daunting at first, especially given the limited number of opportunities out there. But I think that even putting venture capital aside, focus on learning the ropes of investment first. Like, if you can really get there's so many different ways to invest, right? So if you can just get comfortable with the public market first, and then from then on, you can do more research and you can see what it's like to invest in the private market. You can really, by even just listening to something like this podcast, you can kind of understand what the due diligence process looks like. If you can go into an application, into a venture capital role with that knowledge already there, you're going to be miles ahead of anyone else. If you're actually interested in what you're doing and you're not just throwing around buzzwords trying to get another opportunity that you're not really that interested in, you're not going to make it. Right. But if you really care and you really put the time into that research and doing things on your own, not necessarily waiting for someone else to come help you, you'll make it far.
Yeah.
Awesome.
And obviously, investing in the private sector at this age is very difficult. And I completely agree with what Alex said about, even investing in the public markets. But honestly, to add on, I would even say there's nothing stopping you from meeting with these startups still. Yeah, you can't invest in them, but being able to identify good ones, go to networking events, meet with startups, attend these quick pitch events that go on for 2 or 3 hours where you hear 3-minute pitches. Hearing as many startup pitches as you can, or even working with a startup, will give you a lot of experience that you can bring to the venture capital space.
Yeah, I mean, that's a great. I love going to these startup things because you hear there are some very interesting people. Whether that the business model makes sense or not, these people are anybody that passionate to start a business is usually pretty interesting. Right.
Yeah. One of my favorite things about VC is just the scale at which I get to see people's ideas. I would never have known half the stuff that I do now if I didn't watch all of these pitches back to back. I mean, it's just great to see the innovation that's happening around us that you might not see otherwise.
Yeah.
So how do you guys balance your academic commitments with these roles, these demanding roles, so to speak, in the venture capital side? Right. You're doing a lot of research. You're doing a lot of stuff. I mean.
Yeah, it was definitely tough for me starting out college and this internship at the same time. But I mean, if you care about something, you're going to put the hours in, and I was able to divide my time accordingly.
Mm-hmm.
Yeah. Time management is definitely a big thing, and just overall organization. Planning ahead, being communicative. I think if you're able to manage your time well, it's definitely possible.
So it sounds like you guys did it okay. I can see that, right?
We did all right. Always room for improvement.
So what kind of long-term goals do you guys have now that you've gotten a bite of the apple, so to speak? Where do you guys see yourself heading from here?
I mean, there's so much to do. I honestly could not even tell you what I want to do now.
Okay.
When I started VC, I wasn't super interested in venture capital specifically. I mean, I loved investment. I loved the world of entrepreneurship and finance. But now that I've gotten a taste of VC, I want to see what else is out there, And VC isn't the kind of thing that you do once, then you stop. This is something that I'm going to be doing forever.
Yeah, that's cool.
Yeah, definitely the venture capital space for me, maybe more specifically with impact investing, looking specifically and researching specific companies or concepts that are meant to help the broader population or help with, maybe some philanthropic issues, things like that. I think, venture capital overall has a huge place in terms of impact and, helping the underserved, especially with the technological advancements. And even a lot of companies have give back programs that we see in pitches. So that's definitely a big thing.
Excellent. Well, we're going to take another quick break. You're listening to Master Your Finances. Welcome back. You're listening to Master Your Finances. So you're talking about impact investing, right? So that's where you guys want to go from here. So that's your long-term plans. I love it. I love impact. I'm all about impact. So Alexander, what are your plans for the Homeroom Fund going forward?
Big plans. I mean, we're continuing to deploy investments right now. So we've been looking at a lot of companies. I mean, we're just trying to get the best outcome for our LPs, and we're having a good time doing it. It's definitely been fun.
I know you've been raising capital. Can you share how much you've raised so far with the fund? I know you've kept going. Is that allowed or no?
I'm not sure I should be sharing.
Yeah, let's not do that. Yeah. All right. So anyway, yeah. So so what kinds of investments is the Homeroom Fund kind of looking for? I mean, it's called the Homeroom Fund. So what? Any particular thing you're focusing on with the fund?
There's definitely a common misconception that we only invest in like student-led companies. We definitely have access to those networks given that three of us are in college. So we have access to the Northeastern, Northwestern, and UVA startup ecosystems. Mm-hmm. But we're industry agnostic, very tech generalist. We stay away from biotech because none of us really have experience in those fields. But I mean, more specifically, we're looking at a lot earlier stage companies. Seed, pre-seed, and Series A. And yeah, I mean, we do like a physical product. We like a MVP, minimum viable product. So
say it again. Minimum
viable product.
Okay.
So
thank you.
We like
said it quickly.
Yeah. We like to have something physical to actually make sure that the company is beyond that first stage of just an idea. We want to know that they really have what it takes to take off the ground.
So most things are like a physical product?
Not necessarily. That's CPG, so consumer packaged goods.
Okay.
But yeah, I mean, as I said, we're agnostic, so it can pretty much be anything. We look at a lot of tech that's just an app, maybe not a physical product, but yeah.
Okay. You need another weight loss app. I'm just kidding. There's about 1,000 of them now.
Yeah. Yeah, I don't know if that would be an investment.
Every time I turn around, I'm like, the new weight loss app. What do you think, I'm fat? What's wrong with you guys? Thank you very much. I appreciate that. I guess they know.
Gotta stop accepting those cookies. They're gonna take all your
Too many cookies online. That's it, right? I gotta delete cookies more often. That's what I need to do, right? So how about you?
What was the? Oh
yeah. So you're so what do you think your future projects at 1435 Capital excite you the most? What's coming up?
Yeah, so I think, honestly, I'm really excited to learn, obviously we go really deep into like SEC rules and things like that. Learning about that is really exciting, especially like with like market analysis and learning about things like the J-curve. Those are really exciting for me. And especially like, if there's the opportunity to continue with
the J-curve, you got to explain it now.
Yeah.
I love this, the
definitely. It's a common private equity concept.
Yep.
So the J-curve is essentially a graphical representation of the returns over time that you typically see for a private equity fund or a venture capital fund. So obviously it's exactly what it sounds like. It's shaped like a J. So you obviously see that initial downplay in returns, and that's
what's the goal of VC in the J curve? What do you guys want to do?
Make money, make returns.
Well, you want to move back up quickly. You want it to move up quickly.
You want to swoop up, yeah. So
right,
yeah, that initial downplay.
The quicker you get it to come back up again, right?
Yeah. So. The initial downplay of the J-curve is essentially when, limited partners are kind of committing capital.
Right.
And, obviously you have management fees because you're doing a lot of deal sourcing. And then also when you deploy capital into investments, right? You're spending money, but you haven't seen a return on it yet. Right. And then obviously you see that little swoosh where you start to go up. And that is typically where the fund starts realizing, those returns on their investments. They're exiting their investments. And, obviously it keeps going up as you exit more and more investments with higher valuations, And
I think that's important because, because I'm sure that's part of your due diligence, your analysis when you come into like, well, how much money we have to deploy, and how quickly do we think we can actually have an impact on this company to see that return come back to us and our investors? And that's why I wanted you to kind of explain the J-curves. I know it's really important for you guys to make sure that you're kind of hopefully seeing a result. Obviously, it's all projection at that point, but you want to see some kind of result. So,
and I can add to what we're excited for at 1435.
Sure.
We're actually doing our own event coming up about a month from now, so we're very excited for that. It's been a lot of planning, and it's still in the making. But yeah, we're seeing a lot of startups in our own building, so we're going to be having our own. It's not necessarily a competition, but it's kind of an expose on startups. So we'll have speakers, we'll have startups coming in, and we'll have like networking and stuff like that. And then at the same time, I'm also very excited for the future of 1435 in the sense that there might be new funds that pop up. Recently, the 1435 Biofrontiers Fund has started.
Oh.
So we've been working with Junaid Mian, who is another partner at the firm, and he's a very great guy. I mean, I love working with him. I've been working on the deck with him, so it's very cool to see all the new stuff that's happening around.
Yeah, and that's like a biotech mixed with like space exploration targeted fund. So it's obviously
Biotech and space. You mean like Elon Musk stuff? We're gonna like.
Yeah,
You mean like outer space?
Yes.
Yeah,
Okay.
yeah,
We do.
I don't know.
longevity. Yeah.
That's so we're gonna grow like tomatoes on Mars or something. Is that what we're doing here?
It's definitely possible. I guess we'll have to see.
Yeah.
That would be kind of cool. I like that. I think. Well, isn't Elon trying to like put? Is he trying to like a station on the moon so then they can go to Mars? So
Maybe.
I guess you'll have a place to like you do your biotech stuff, right? If he has a location you can go to.
We'll see if Elon Musk makes it there before 1435's port goes.
Oh, all right. Let's do it. it's like a little competition among the VC people. So do you guys like when you hang out with other VC people? It's like what kind of conversation do you have with like your I don't know if they're competitors or friends or how do you view them when you guys hang out?
Never competitors. Yeah. It's good to share deal flow and kind of be
Right.
friendly in that aspect. You can always help each other out.
Yeah, there's a lot of co-investing. In fact,
Right.
oftentimes you'll see VCs actually go together on investments. Obviously, it's a way to mitigate the risk.
Sure. And you get more expertise thrown in
And
there
you
too.
get you definitely get more expertise,
Yeah.
especially with the fund that Alex was talking about. We were looking to bring someone in who has a lot of experience in the biotech fund.
Right.
So yeah, VCs, I would actually say it's a lot more collaboration.
That's great.
Yeah, even if you speak to Ben, he's worked with a lot of different venture capital funds in New Jersey, outside of New Jersey. Yeah,
I'm aware of his portfolio, which we
Yeah.
can't discuss, but yeah.
Yeah.
He's definitely got diversity going on.
Yeah.
So what has been the most important, unexpected part of working in venture capital so far that you've noticed? What was unexpected?
I think that the thing that was most unexpected for me was probably just the amount of work that you have to do in terms of like busy work. Not that it's a bad thing, but it's a lot of time that you spend just going through a lot of similar stuff. Like oftentimes you'll feel like you're going a bit crazy seeing the same stuff over and over again. But you have to get used to it, and that's
Like what kind of stuff you see over and over again?
just like within companies, within startups that you're looking at, like
okay,
the same. It's good to have like a good BS detector on you, so that as soon as you see a
I
company,
see.
you know like this is not something I'm going to invest.
So are they writing their business plans using AI and you're seeing some repetition
That
going
is
on?
definitely what we've seen. Also, just like incorporating AI in a way that it does not need to be incorporated.
it's more
at
often than
all.
you think. Yeah.
Yes.
Yeah. To me, AI is a starting point because anytime I've tried to use AI, it's like, all right, well, that's fine, but
It's definitely
I still got to do it. I can't. It doesn't really.
It's in its early stages.
Oh, for
see if
sure.
That continues.
Yeah, for sure. So what about you?
Yeah, so for me, the most surprising thing has probably been on the dependency on the team, right? It's I probably came in just thinking that it's all about the idea and their financials, obviously, but
Right.
I think over time I've really been able to see that you are putting a lot of faith into the person, not the idea, in their ability to execute the idea. I mean, we've honestly rejected companies for things like they had a bad pitch. Their idea was good, their pitch was bad, or they weren't very communicative in their pitch. They weren't answering the questions directly. I mean, simple things like that go a long way.
It's fascinating you say that because I often repeat this. Is that and I know this is true. Is that one of the number one indicator of success for business people, especially or anybody for that matter, is their ability to communicate.
Yeah.
Whether it's written, verbal, in person. The better you communicate your ideas, the more likely you can get people to do things with you. It doesn't matter what level you're at.
Yeah.
You're still going to be more successful because people understand like what you're talking about, right?
Yeah.
And the better you can communicate that,
Definitely.
it really works best for everybody. So, how do you guys see your personal values aligning with your professional activities?
I think that this is a great question because it actually goes into what he was just saying about the team. When I meet someone in my personal life, I'm not like super analytical of like anything they're saying. It's kind of just like based on.
When you're dating, you're like analyzing.
Oh, I don't know if I'd go into that. Not live.
It's like I got to do my due diligence here.
Yeah.
Where's your pitch deck?
But you definitely have to be careful of like the people that you're spending your time with in the VC world and communicating with, because oftentimes someone's going to be a great connection, but other times, you just have to be very careful and make sure that you're talking to a lot of people, right? So you have to be intentional with what you're doing.
Yeah, that makes a lot of sense.
Yeah. even regarding personal values, right? Especially if you support a cause that a certain product is targeting, obviously you'll have more expertise with that. I mean,
Right.
one of my coworkers has heavy experience in the tech industry.
Right.
So, he's often a great person to bounce things off of for AI, tech-related things. So in terms of personal values, when you see a cause you're passionate about or something you have heavy experience in, it goes a long way when you're evaluating companies.
Well, that's really awesome.
Yeah.
You guys have been fantastic. This was a lot of fun. I appreciate what you guys are doing. I love to see young people involved in this thing. I just think it's awesome. It benefits everybody. You've been listening to Master Your Finances. Have a great day.